been looking for a way to make a passive income while being a forex trader, then this video is for you. Do not skip any part of this video because you are going to learn a lot of strategies that I have implemented in my trading that will help you out. Okay, you have been trading so many times and you have been making a lot of losses, and then you don't know where to start. You are tired of trading, you want to really quit from trading. No, this video is going to be a help for you. Okay, you are going to learn every step on how to get a winning trade. This is the correct strategy that I have used, and it has worked for me, so I decided to come and share it with you. And there are a lot of patterns, a lot of charts that you might not even know when to enter a trade and when not to enter a trade. I'm going to show you all these things, step by step guide on how you are going to do that. So don't skip any part of this video, because if you do, then you are going to miss important part of it. So stick to the very end of this video. So if today is your first time of coming across my video on YouTube channel, kindly subscribe to this channel, like this video, share with your friends and family, and don't hesitate to hit the notification bell, so whenever I drop a video like this, you get notified. Okay, so now let's move to the video. Let me show you the chart. Let me explain it bit by bit and the different names I have given to them. You're going to understand that trading is not a rocket science, that is actually easy to trade. Okay, because you have lacked this knowledge, that is why you think that trading is very hard or difficult. No, it is not difficult, it is not hard. So let me show you how you get started. If you want to be profitable as a trader, then you do not want to miss this video, or you do not want to skip any part of it, so that you will implement all the strategies I am about to show you in this video. Okay, now let's get started.
This number one is called symmetrical triangle. Symmetrical triangle is a chart pattern where the price narrows between ascending and descending trend lines, signaling a potential breakout in either direction. So study this chart very well and look at it very well. So whenever you see this trend, these lines, you know what it means. Okay. Now the second one is called descending price channel. A descending price channel is a bearish continuation pattern where the price moves between parallel downward trend lines, indicating lower highs and lower lows. It suggests a continuation of the downtrend as long as the price stays within the channel. When you look at the movement, this indicates a downtrend. So whenever you enter a sell within this range or within this channel, it is still going to be going down, and you are not going to close the trade as early as possible because it's still downwards. Okay, so the third one is diamond formation. Diamond formation is a reversal pattern that signals a potential trend change. It forms when the price expands to create a broadened top, followed by the narrowing systematical triangle. This pattern can indicate a shift in momentum, leading to a breakout in either direction. Okay, thought it's typical bearish. So this thing now is like, as you can see here, this is going to indicate that there is going to be a change, okay, in the direction of the market. I think this is the fifth one, ascending triangle. Ascending triangle is a bullish continuation pattern indicating a potential upward breakout. It is formed by horizontal resistance line or rising support line. This is always showing multiple highs at the same price level, okay, connecting higher lows ascending towards the resistance line. So the next one is called descending triangle. The descending triangle is a bearish continuation pattern indicating a potential downwards breakout. It features horizontal support line. This means multiple lows at the same price level. Then descending resistance line is connecting lower highs, sloping downwards towards the support line. Look at the chart very well. Now the next one is called head and shoulders. The head and shoulders pattern, it is bearish reversal formation, including a potential shift from an uptrend to downtrend. It consists of three peaks. Number one, left shoulder. Number two, head. And then number three, the right shoulder. The left shoulder is a peak followed by a decline, while the head is a higher peak than the shoulder. Then the right shoulder is another peak similar in height to the left shoulder, followed by a decline. So look at it very well. So the next one is called double top. The double top is a bearish reversal pattern signaling the potential end of an uptrend. It consists of two consecutive peaks at approximately the same price level, resembling the letter M. So the next one is called double bottom. The double bottom is a bullish reversal pattern that signals the potential end of downtrend. It features two consecutive troughs at approximately the same price level, resembling the letter W. Look at it very well. The next one is called cup and handle. The cup and handle is a bullish continuation pattern resembling a teacup with a handle. It consists of one, cup, a rounded bottom forming a U shape. Number two, handle, a short period of consolidation or slight decline forming on the right side. So guys, make sure you study all these strategies I have shown you in this very video. So we have come to the end of today's video. Thank you for watching. Don't forget to subscribe to my channel, like this video, share with your friends and family, and hit the notification bell so whenever I drop a video like this, you get notified. Bye.